Okay, so this is the next part of the saving functions. So in this video, we will discuss about the determinants of the saving function. So basically, the determining factor that contributes to the saving function includes three factors. So we have the desire to save, power to save, and facilities to save. Okay, for the desire to save, of course, this is related to the willingness of an individual or the household to save. So, this is normally the major driving factor towards saving. Okay, so because of the desire or willingness of the individual. So, there are factors also that affect the desire of an individual to save. So number one is, of course, the level of their income. So here, this is considered to be an important determinant of saving because, as we all understood, if there is a higher level of income, therefore, it is also possible that there will be higher level of saving. Okay, or eventually, there is saving. So, for the second factor is the provisions for the future. So, the future requirements of money is uncertain. Okay, so of course, when talking about the future, there are risks and uncertainties. Therefore, in order for us to have a secured future against any uncertain events in terms of financial aspect, so we tend to save at present. Okay, so savings can be taken as a precaution for any unforeseen needs in the future. So that's why um, there are people who would like to save because again, this will be uh, used in the future. Okay, for precautionary purposes. So the second determinant factor is ability to save. So here, in spite of the willingness, one cannot save if they do not have the capacity. So that is correct. Okay, so here, what about if you're willing to save but your income does not um is not enough, okay, for you to have the saving. So therefore, ability to save is an important factor as well. So saving is only possible if an individual can meet all of their consumption expenditures and still have some left, okay, from his or her income for savings. So the ability to save depends on the level of income and consumption expenditure. So the ability to save is also uh, affected by these factors. So number one is labor efficiency. So this is the ability or power to save. Depends on the labor efficiency. How is that so? Because in this case, if an economy has an efficient group of people, so the result will be the production will increase and there is efficiency. Okay, so the result will also increase the income, and thus people can have more money and can make savings even after meeting all of their consumption expenditure. So, I mean to say, uh, if the work or the production of an individual from his labor is efficient, so there is a tendency that his income will also be increased. So therefore, there is a greater possibility for savings. So the second factor is the size of the national income. So here, the higher the national income, it is viewed as uh, this way. The higher the national income, the greater is the ability to save. Okay, so on the other hand, low national income is the main reason for no savings at all. Okay, so of course, a national income reflects also the individual income levels. So we can see if, based on the national income, if the population uh, is able to save based on the level of the income being earned. Okay, so the next factor for the ability to save is the developmental activities. So here, what are the developmental uh, activities? So this is related to the various sectors like trade, industry, or industrial areas, agricultural sector, and the like. So these are the source of increased income level. So as there will be more inflow of money into the economy. So of course, if we know and if we see that these sectors are thriving, meaning to say that there is more source of income that is flowing, okay, to the individuals who are engaged and even to the national income. So the third determinant of saving function is the facilities to save. So here, the first factor under this one is the development of financial institutions. So here, what are financial institutions? So these are the uh, organization or institutions where you can have loans or you can invest. Okay, this is where you go to. So the development and expansion of financial institutions like bank, cooperatives, and the like, they encourage people to save more with their effective marketing strategies. Okay, so investment can also be a form of savings because you can have or you can claim your investment or dividends in the future. Okay, or like for example in the banks and deposit your money. Okay, while you are not spending it at the moment. Okay, or others are extending loan because others are also needing additional funds. Okay, so here they provide attractive interest rates on savings. For example, on banks, if your deposit is on-time deposit, so meaning to say you cannot withdraw at any time after a certain period of time based on the contract, so you will earn interest. Okay, that is also a form of savings. So another is the rate of interest. So here, of course, the higher the rate, if in the case of saving deposits, so people will be encouraged to save more. So when the interest rates are high, okay, people save more, and when the rates are low, of course, they withdraw and spend for their consumption. So the third factor is the social security system. So the provision of security systems such as pensions, insurances, allowances, and the like, they reduce the rate of savings because people are uh, they tend to rely on this security system because they will have it. Like for example, if they retire or if they have sickness, they have medical insurance, or if they will be unemployed, there will be allowances. But again, these are minimum. Okay, this cannot this or security systems provision is not enough for you to survive in the long period. Okay, so probably it will last for like months, but not for years. Okay, so because of this, it reduces the rate of savings in the country because their savings they put it into the trust for security system. So when there is adequate provision of social security, the society, so that is what we have mentioned earlier, people will feel secured about their future and they spend more of their income on the consumption. However, you have to take note that this provision is not enough for you to sustain in the long period of time. Okay, the fourth factor for the facilities to save is the progressive taxes. Okay, progressive taxes means um, the higher the income, the higher the tax. So because of this, it reduces the savings as taxes increase with the increase in income. If you could still remember earlier the concept in which if there is increase in pay or income, the tendency also is that the savings will increase. However, because of the progressive taxes, as your income increase, your taxes will also increase. So therefore, it will result into reduced savings. Okay, so people with higher income save less because of the taxes that they need to pay. But if the taxes on expenditure are higher, then they are encouraged to spend less and save more. Okay. So, however, in our country, we are also following this type of taxation policy. So, we have the progressive taxes. Okay. And the last is fiscal policy. So, of course, fiscal policy of the government, this affects the level of savings. How is that possible? If taxes are imposed on unnecessary commodities, okay, so they might implement policy for imposing taxes on necessary commodities like basic needs. Okay, so therefore, people cannot save because they have to pay more because there is additional tax on the price of the commodities. Um, on the other hand, okay, if there is a reduction on taxes on the basic goods, this will also lead into increase in the level of saving. So if taxes are high for luxury goods, so people are enticed to save more than to purchase those goods. Okay, which is actually uh, what we have, okay, in our country. So especially if that is from abroad or imported goods or products, okay, depending on how they are transported. Okay, some goods from abroad are actually tax free, so they are much lower, while others have higher taxes. So, depending on the policy that is being implemented by the government. Okay, so those are the different determinants of the saving function. So, these are the factors that affects the saving ability of the individual.